Thanks everyone for joining me again. This is the second part of a six-part series on financial visibility. So if this is your first time, I'm just going to give you a quick overview of what we talked about last time. So we talked generally about financial visibility and what that means for your business. But if you were really to boil it all down to one idea, it's about making smarter business decisions. So it's that looking ahead to the future to see where your business is going, avoid the potholes, make the right turns, and be able to guide your business in the right direction. So as a business owner, you will constantly be making decisions that impact the future of your business. Do you have good information and data to support that decision, or is it all just sort of hope and feel that this is the right way to go? So last week we touched on the 5 critical mistakes that a lot of businesses make. So real quick, let's just kind of run down those 5 areas again. Number 1, focusing too much on financial accounting and neglecting management accounting. So this is going to be today's topic. So in a minute, we'll really dive into the details of what that means. The other 4 critical mistakes: failure to properly establish budgets and to track variances, taking too long to close out your books each month, managing cash flow to short-term needs rather than long-term, and an inability to view key financial data on a regular basis. So today we're going to be talking about that first area, financial accounting versus management accounting. So I mentioned that new businesses, and really even some not so new businesses, they often focus too much on just financial accounting. The thinking is as long as the financial statements are accurate and the tax returns are filed, accounting is taken care of. So this is the mistake. You also need management accounting. Now, to be clear, financial accounting is still vital to your business. So let's kind of touch on what that means exactly. So financial accounting is all about historical data. What happened last week, what happened last month, last year. It takes the form of financial statements, tax returns, any number of reports. But the idea is you're looking backwards. You've got visibility into what happened, not what is going to happen. So like if you think about your tax returns, how does that get taken care of? Maybe you meet with your CPA, he tells you what you need, you give him that information, he prepares the tax return, you come back in, you sign it, he sends it to the IRS. So when you're sharing that tax return with the IRS is an outside interest. It's an outside stakeholder. Similarly, like with your financial statements, maybe you're taking it to investors, or you're taking it to the bank. These are all outside stakeholders, people outside of your business who have an interest in your business. Now, obviously, this is really crucial stuff. Having a bookkeeper and a CPA to handle this can be a huge burden lifted. You've got that taken care of. You're not having to worry about it. That's a huge stress relief. But what you have to understand is the mistake isn't making this a regular aspect of your business. It absolutely should be. The mistake is just stopping right there. So you've got, let's say you're doing this, you've got all of this historical data at your fingertips. What are you going to do with it besides just send it off to the people and the agencies that are asking for it? So that's what management accounting is all about. It's the process of leveraging financial data to manage your business. It's using the data internally to make better business decisions. So you can see on the slides, there's several examples of what that might mean. Let's just take a look at that first example real quick. So budgets and variances, which will actually be the topic for the next time, so we'll go into even more detail about it then. But a budget is a managerial tool. Obviously there's always going to be exceptions, but typically you're not sending your budget off to an outside agency. So setting a budget, it's a useful exercise in and of itself. It helps you start thinking about the future. What's this year going to look like? What's this quarter going to look like? But to really take it to the next level, you have to be comparing it to your income statement on a regular basis. So this is, if you're doing this comparison and you're looking at the variances, This is how you start to recognize some red flags or inflection points. You're really going to start to see, where maybe your forecast into the future was off a little bit, or maybe some things came up that changed it. But if you're not comparing your budget to your actual results, it's not as useful. So let's take a really simple example. Let's say you've got a budget of $100 a month for office supplies. And let's say in the first 3 months, you spent $100 the first month, $100 the second month, $400 the third month. So does that mean you just say, well, I made my budget for 2 months, but missed it 1 month? And then you just keep spending that $100 each month? What you should do is make a decision on your remaining budget. So will you figure out a way to spend your remaining $600 budget of office supplies, for the final 9 months? So kind of stretch out that budget to fit. So you're going to kind of lower it each month. Or maybe you over budgeted in another area and you can borrow from that bucket. Maybe you budgeted a certain amount for your cell phone bill, and you worked out a deal, and now it's coming in $50 less a month than you thought. Well, you can kind of adjust, like, okay, I'm going to put that $50 that I'm saving in cell phone, and it's going to go to office supplies. Now, there's certainly good and bad reasons for doing either one of these, taking either one of these paths. But the point is, now you're making decisions based on real information. You're not just continuing down the same path and maybe at the end of the year you see how you did. You're actually making decisions. You're changing how your business is run, and that's going to put you in a better place going forward. So there's other examples listed here on the PowerPoint, but there are even there are countless other examples in the real world. Different reports will be more important to different people in different industries or at different points of the business life cycle. So how do you know what is best for you? One starting point is just start thinking about all of the big decisions you're making in your business. So when you make that decision, what information are you using to make that decision? Is it just a gut feel, or do you actually have data? If you're looking at that decision, you're like, boy, I wish I knew X so that I can have more confidence in this decision I'm making. Well, okay, how can we reflect that in a report? So you start figuring out what information would help you with that decision. You're going to be able to work to find the best reporting methodology. Now, this is definitely going to be a work in progress. You constantly have to be monitoring and tinkering with it and finding out what's best going to work for you. And then when you've got that reporting, it just starts to become routine. I can tell you in my own business that I run, we have several reports that we run on a weekly basis. We've got monthly reports, we've got quarterly, and we've got annual. And those weekly reports, it not only gives you, visibility into how things are going, and you start projecting forward, and it gives you that insight on what changes need to be made, but it's going to start holding you accountable to different things. If you forecast, your week, like, okay, this is what I'm going to do this week, and then you take a look at it and you didn't hit that forecast, well, why didn't I hit that? What stopped me from getting there? And then you can change things up. You can, again, you can start making decisions. But you need the data first, and to give you that visibility and to know what you really need to be changing up. And of course, you can always seek out the people who have that experience already, which is what we can do right now. That's what I'm here is to kind of help you. If you have any questions, start thinking things. So I appreciate you taking the time to speak with me today, and I look forward to talking to you all now. So thank you.